We have two stocks being added to the S&P. We have one stock earnings coming up tomorrow in the after hours. How exactly do we profit off of them? I am Dr. Stock, Doctor of Education, and I plan to talk about just those things in this video. I do want to let you know that I changed the wheels on my car the other day, and do you know how it felt afterwards? It felt tired. Blackstone and Airbnb are being added to the S&P 500 on September the 18th, and we need to talk about what the implications of that inclusion are. And then also C3.ai reports their earnings tomorrow, Wednesday, September the 6th in the after hours, and we want to take a look at how to capitalize, if at all, on each of those three plays. In this video, I will be showing you the Moomoo app, and I'll show you later how you can get up to 16 free stocks. And then also my Patreon, you can find that link down in the description where I post my buys and sells. And I'll tell you what, there's also this collection that I have up over on the Patreon now called Portfolios Amplified for Options. And that is a course that I'm building out right now. There's currently 6 videos. I just put up 2 this weekend, and it starts from the very beginner for options and will go all the way up through advanced options trading strategies. Lots of value there. With that said, let's move on to Blackstone. So here's the chart for Blackstone. The ticker symbol on this is BX, and you can see that it has broken its long-term downtrend that it was on. It bottomed out at around $70 per share, and since then we've been on a steady uptrend, and we're currently hitting resistance right at about 108. And what I think that you should know about this is when stocks are included in the S&P is there's typically a run-up in price up until just before that inclusion date, and then we usually get a sell-off from there. So with Blackstone, I think that if we can go up above 110, that we have room up until about $115 per share. We'll see if we can break that between now and September the 18th. And leading up to that date, remember, wherever we start to peak out is where we usually start to see a bit of a sell-off. And so I think that we can see about 5% up from where it sits right now, leading up to about that 115, but we got to break 110 first. So that's Blackstone. And then Airbnb, which had a really nice run so far today. So up about 7%. You can see that gap up that it has, also coming off its long-term downtrend and sort of setting up a little bit of a bullish channel for us. And it did right now hit resistance at right around $143 per share. And for this one, I think we can break up above 145. I think that gives us room up to about 150. And so this is another one for that S&P inclusion that could run up in price. 150, by the way, is right about, there we go. And you can see if you look across the horizontals for this where 150 puts us. I'll put it back over here so you can see that as well, that we start to hit that hairy zone right here where we start to really run into just a mix of results where we started to get support, which it now turns to resistance since we're coming up on the bottom side of that. It is possible that we see up to 155 for something like this one. So how exactly do you capitalize on these plays? One of the ways that you could do that is through directly buying those stocks should it go up above those prices, where for Blackstone you would have above 110 would be about where you would enter, and then you could have your stop from that at about 108 or 107.50, and then you could have your exit to the high side of that at about 115 or just below $115, giving you a 2-to-1 risk reward ratio. And then for Airbnb, this is one where you could set an entry above 145, and then you could set your exit for that at about 150 with that stop loss at about 142.50. And none of this is financial advice. This is just ideas that I'm putting out there. Do your own research, do your own technical analysis, and with that due diligence in place, go ahead and make your decision. Now that's buying the stock outright. And I do also want to point out that you can do things with options plays. So you could buy outright calls if you believe that this is going to be bullish. However, that is something that would be trading with a defined risk, but it'd be kind of expensive, although it's unlimited to the top side. It would be undefined as to just how much profit you could get from that. So high reward also coming with a higher risk. However, you could do something like a vertical call spread on this one, or a bull call spread, where you buy a call at, let's say, 145, and then you also sell a call at about 150. And what that does is it caps your losses, but it also caps the top side of it. But you could still stand to gain significantly on something like that for Airbnb, or you could also do the same thing for Blackstone as well, where you'd be buying that call at about 110, selling the call that you would have at about $115, and then you would have break evens that would be between those two prices. So you wouldn't even need the stock to make it all the way up to that 115 for Blackstone or the 150 for Airbnb. And now, mind you, you can always multiply the number of contracts to increase the gains that you have. But remember, that also increases the risk through the premium that you have to pay to enter it. So that is called a vertical call spread, or in this case, specifically a bull call spread. And then as we get closer to that inclusion date, if we believe that we see a significant run up and that is going to lead to a significant sell off, we could turn around and we could actually buy puts to take advantage of that as well, and then sell them to close and get even more premium should it drop from there. So that's the options idea that I have, the stock idea that I have for those two companies. And like I said, you could take advantage of that. And if you want to see more about options or even learn just from the very beginning, and like I said, all the way up through advanced trading strategies, that Portfolios Amplified course for options that I'm building up over my Patreon, that link is down in the description. Next, we're going to get to C3.ai, and I'll tell you exactly how I'm playing that one, but I do need to let you know that down in the description of this video is the link for Moomoo, where you can click it, sign up using my link, and that gets you up to 16 free stocks. Here's how you do it. Deposit $100 or more, and you get 5 free stocks, 15 free stocks for $1,000, and 15 free stocks plus a share of Tesla or Google guaranteed for that $5,000 deposit level. And like I said, you get that using my link down in the description. And they also include advanced option strategies as well, just like the bull call spread that I talked about in this video. And I'm also next going to tell you about the strangle that I used on C3.ai to benefit off the volatility that I think is coming with their earnings. So let me put Moomoo back up there for you, and I'm going to put up the chart for C3.ai. Here we are. So let's zoom in to see what's going on recently. You can see that we are narrowing here, and in my previous video on this, I showed you the Bollinger Bands, how we get that narrowing, that there's likely a breakout coming soon for them in either direction. I did say that not only I'd tell you how I was playing it, but also if I developed a bias for this, that I would tell you about that as well. So I have a bias building on it, and so I do want to give you that update. Now, I did place a long strangle on this where I have a $31 put that I purchased, and I also hold a $32 call that I purchased. And so what I need this thing to do is either go up over $36 per share, or I need it to drop down below $27 per share. And I think that we're going to get enough movement from earnings plus market bias in order to move us in that direction. Hopefully there's confluence and the market moves together in the same direction that we get with C3.ai. So for this one, I think that we're going to get an incredible move off of earnings, and I think that we're going to get well over a 10% move by the time the market opens the following day. So we're going to watch for that. Right now, trading at about $31 per share, and so it would be $5 to the upside to take us up to about 36, would take us about to the 50-day, so we'd still be below it, and that'd be very significant resistance for us, I believe. And then down to 27 from here is about $4 down, and really possibly we even push down as low as $25. That would take us down to that 200 days. So if this moves as much as I think it will, pushing us down past the 27 down to the 25, which I think is a high likelihood, then that also works out very well for me. Now I could increase my profitability on my options play, but remember, increasing profitability also combines increasing risk that goes along with it. What I could do is I could pick a single direction on this one, a call option if I'm bullish on it, a put option if I'm bearish on it, if I'm going to do a single options play, which you can also do through the Moomoo app as well. Like I said, that link's down in the description. However, if this is one that I'm sort of on the fence about and I really want to protect how much I'm investing, so protect my risk, but also look for some upside to go along with it, but also capping the upside, then I could also put on either that bull call spread, or I could even put up the bear put spread, either one of those to take advantage of the direction. Now I am leaning in the bullish direction for this one, and I do think that $36 per share is something that we could absolutely see as a result of the earnings if the demand for AI and C3.ai services are as strong as I think they are. I have not yet taken a position besides the strangle and C3.ai. That is the only position I currently hold. However, if I do place another one, it will likely at this point in time be that bull call spread, or even straight up calls to take advantage of the bullishness that I think that we're going to get out of this, possibly taking us up to that $36 per share. And if I did that, I would do that with a short expiration, and then I would have to actually let's go over here and we'll take a look to see what those calls are going for. As a matter of fact, as of today, we are trading right now near $31 per share. If we look at the $31 strike, it costs us about $200 in premium to enter that. So that is our maximum risk by buying that call, $200. And because we're choosing a short expiration of September the 8th, it's possible that we lose that premium entirely following earnings, if not all of it, nearly all of it. So that's the risk, but it's a defined risk, and you want to most definitely pay attention to the percent that you are losing or gaining, not necessarily just the dollar amount itself. Now, if we run up to $36 per share, like I think that we can, should we go in a bullish direction, that would be a 2.5x from that $200, because you would get $500 by selling to close that position, and that would mean $300 profit from the $200 that you ended up spending to get into that position in the first place. Remember what I said about the bull call spread, and it also applies to the bear put spread, whether you're bullish or bearish on a position like this one, that even though you're mitigating against the downside risk that you would have, you are also capping the amount of profit that you can receive from it. So you don't stand to lose as much, but you don't stand to gain as much, and everybody will have their flavor and their style, and some of it could come based off your own research and conviction that you have in the play. If you guys like my commentary on this, if you would like to know more about options, come on over to my Patreon. That link is down in the description. My options course is being developed right now. Portfolios, amplified, options over at the Dr. Stock Patreon, and also Moomoo if you want access to that along with its advanced options strategies. That link is also down in the description. Go ahead and sign up, make your deposit, get your free stocks, and really work on fleshing out those portfolios, guys. Thank you for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.